Zimbabwe's new gold-backed currency, the ZiG, strengthened a day after its debut, even as it roiled commerce nationwide as banks, retailers and utilities battled to switch to the new unit. It gained 0.2% to 13.53 per US dollar, according to data published on the RBZ's website on Tuesday. It began trading on Monday at 13.56 per dollar. To get more insights on these movements, we now speak to our business correspondent, Eben Mabunda. Eben, it's a very good evening to you. Now, what is the significance of this movement?
Well, good evening, Faith. This, of course, is the second day of trade, and perhaps not much to read into it, given the fact that the printed version of the ZiG is not yet in the market up until the 30th of April, according to a statement issued by the Reserve Bank of Zimbabwe. So what we're seeing are the flows that have taken place at a very minimalistic state through electronic balances. Most of the banks are yet to allow the trade in the new currency, and so it remains to be seen how exactly the currency will flow, but of importance is the fact that we have got a floated exchange rate. That means we are operating on a willing buyer, willing seller, a market determined exchange rate that we've got in place. So time will tell, and it's still too early to read into the movements that we've seen playing out as yet.
Now, given that, Eben, what would be required to ensure the stability of the currency going forward?
First, it's important that money supply be kept in check. According to the central bank, the ZiG is being backed by $285 US worth of reserves, and the governor has said that the growth in the reserve money should not exceed that $285 million US, or should I say the growth in terms of those particular reserves. Now, Zimbabwe has a history of having failed in that regard, given the bond which was initially backed by $200 million worth of for Afreximbank credit, and the growth in terms of the reserve money exceeded that particular yardstick. So the litmus test will be in the new central bank governor seeing to it that the growth in the reserve money does not exceed the growth in terms of the reserves that Zimbabwe has. But over and beyond that, there is also a blind spot, which is that of the 25% surrender requirements for the exporters, which will need to be liquidated at the prevailing exchange rate to get the ZiG equivalence. So the question then becomes how the central bank will support and finance that 25% surrender requirements. There is also, of course, the aspect of the treasury bills, which is credit within the economy. That is also an aspect that needs to be attended to. The third aspect also has to do with the looming and the apparent El Nino, which of course needs Zimbabwe to finance the import requirements for the country as the Zimbabwe gets into a lean season, as well as the infrastructural requirements of the economy, which of course need to be paid at this particular point, and of course in the successive months. And so all of these are militating against this baby currency that has just been hatched, and so there will be need for tight fiscal policy, as well as a tight monetary policy to see to it that the currency is well supported and the stability where the new ZiG is concerned.
Konapo ipapo pa ZTN Prime, DSTV channel 294, the place to be.